What's up, YouTube? Eric here, Mr. Fired Up Wealth, continuing the series, the Artificial Intelligence, the AI stock series. Now, this is high growth AI stocks, kind of under the radar when you think of AI. So these stocks are the highest growth, covering different secular growth trends. They're not like the mega cap tech stocks you think about when you think of AI. And we're covering 12, really probably closer to 15, 16 different stocks. And I'm continuing that series today with UiPath. Is it a buy at these levels? I'm going to break down the company, just show you the AI side of it. Then I'm going to give you my opinions on the stock price and whether or not I think it's a buy at these levels. So if you have not subscribed to the channel, please subscribe. Click that little bell to get notifications, and definitely go back and check the series out. We've got a bunch of videos on the channel, an entire playlist that covers AI. When you think of AI, it's a large universe. Artificial intelligence, problem solving, deep learning, machine learning, robotics. We just did a video last night on intuitive surgical, robotic surgery. Today, we're going to continue the series with robotic process automation, UiPath. All right, guys, UiPath. Now, this stock actually IPO'd back in April, and I told the Discord gang to be patient, said it was going to come back probably in the 50s, the mid 50s. Now, this stock actually was a high of $90, and after its last earnings, it's been in a steady decline. The low on it's around 51 bucks. It's trading right now at about $52, $53, $52.96 at this given moment. And so you're wondering, is the stock a buy? And I'm going to share more with you later because there is a lockout that's coming up. So this does have a lockup period coming here in a few weeks in October. I'll talk more about that later in the video, but it's something to be aware of. So this is trading around $53. What this video is here today, guys, I'm focused on UiPath from the AI and machine learning perspective. If you want more information about UiPath, I have a 30-minute video I did before the IPO. I'll put a link above and go check that out. From an AI perspective, this one has to be on the AI series because it is a high growth company. The growth has decelerated a little bit. We'll talk more about that later in the video as well. It is the leader in robotic process automation. There is competition with Microsoft and with others, but let's focus on the AI part of it because there's a lot of AI and machine learning behind the scenes. I'm going to go through each sector or category within the company. So they have something called, this is the most important one. It's called AI computer vision. Computer vision technology utilizes AI that can recognize and interact with constantly changing elements of on-screen documents, images, and applications. So essentially, it's going to see what's on your screen. It's going to assist you. The AI is smart enough to actually help you get to the next location faster and save you time. It saves man hours, basically human hours. A lot of that data entry is replaced with robotic process automation. They also call it RPA. They also have fully AI-enabled platform. AI is utilized in a number of areas of the platform, which enables organizations to embed AI into their operations. Okay, so this, you can start to see already, this deserves to have a spot on the AI series. Document understanding. Computer vision technology is combined with optical character recognition, natural language processing, and a variety of, here's that word again, machine learning or ML technologies to classify and extract data from documents and images, handwriting, and scans. That's pretty cool stuff right there. Low-code development tools, you hear this one a lot with some other stocks that we've covered on the channel. Intuitive low-code drag and drop environment, similar to a video we just did, if you recall, on Twilio. And it has drag and drop development tools that are easy for non-technical workers to use. So really, UiPath is for everybody in the organization. Anybody can use it. So they also have enterprise-grade governance and security. So their architecture also works well with UI automation as well as API integration to make it work with other applications. So flexible deployment, you basically can deploy it anywhere. So you talk about on-prem, private, cloud, hybrid environments. You can really use it anywhere. They have an AI center that helps to bridge the gap between data scientists and automation by enabling customers to integrate and deploy their own machine learning models into workflows. So you can see right away, guys, lots of AI and machine learning built into UiPath. All right, this is the investor presentation from the recent earnings. I want to go through just a couple of quick slides here. At a glance, you can see 60 billion plus market opportunity. So there's a lot of total addressable market. The ARR, 726 million, 60% ARR growth rate year over year. You can see the customers of $1,000 or more in ARR is 1,247. The global customer base is 9,100. There's something really interesting about this. I'm going to talk more about when I get to the actual analysis of the stock and what I'm going to do with it. So stay tuned for that. that. And then that dollar-based net retention rate, or the NRR, is 144%, which is a really solid number. So what UiPath really helps is with productivity, replacing some of those man hours. And they try to pitch it as, we're not replacing humans entirely. We're trying to make them enjoy their jobs a lot more and basically allow them to focus their energy on more important tasks versus mundane, data entry type tasks. 50% plus decline in productivity growth, billions of hours spent daily on manual tasks. They're trying to replace that and eliminate that with robotic process automation. So this is where they talk about TAM. This is a Forrester quote: automation promises to change the nature of what an organization is, what a company does, and how work is done. A fully automated enterprise, $60 billion plus TAM, secular tailwinds driving market expansion, digital transformation, et cetera. You can see the growth trajectory from 2015, 10 billion to 17 billion. They're saying basically beyond 2024, it's a $60 billion opportunity, and it's a $30 billion opportunity by 2024. Okay, guys, so again, this video is focused on the AI machine learning. I mentioned AI computer vision and also the UI automation in the previous slides. So accurate and robust emulation of human interaction with UI, that's really important. Computer vision enables our software robots to automate virtually any UI. And there's two kinds. There's attended software robots that work with humans, and then there's unattended software robots. Essentially, they can do work independently, and they only work with a human if they need validation. So here it is again, guys, infused with machine learning and AI. The task mining, the AI center. Automation Cloud is going to be huge for the business. I'm not going to spend a lot of time on it right now, but this is going to be really critical. This is really important just quick as a potential investor. So multiple vectors for future growth. They want to land new customers using breadth of product platform, okay? But then they also want to accelerate the flywheel to drive customer expansion. So that's where the NRR comes in. They basically will get a small footprint in and then constantly grow it. And they keep building more and more modules. In this last quarter, I think in the last quarter, they announced 12 new modules. They're constantly coming up with new modules and new ways of helping their customers, right? So that's going to be important. That research and development is going to be critical, and constantly innovating and making new products is going to be critical. And they've done a really good job of that so far. And that NRR really reflects that retention rate. They're growing those customer bases, those footprints. As they get a new customer, they're growing them more and more and more. The larger customers, you can see on a slide in a minute, they've grown exponentially over time. This is important to note because they have a lot of partners and SIs that can resell some of their products. 4,700 partners, okay? Technology partners, business partners. You can see on your screen some of the huge names. They literally work with everybody, guys, and that's important to note. Okay, business model. We manage and measure our business based on ARR, annual recurring revenue. It's a subscription model primarily billed annually, primarily one-year contracts, and pricing is based on number of robots as well as users. So this is their ARR. You can see the growth, 76% CAGR. Okay, so you can see back in Q1 2020, 204, this is in millions, up to 797. So you look at this and think, well, why is the stock down so much? I mean, it looks like it's rapidly growing its ARR, and that's how they measure their business. 76%, compound annual growth rate. But the problem that analysts have with it is the growth is still good, but it's decelerating from where it was. And that's the concern. People are concerned about competition with Microsoft and with others. So customers, guys, you can see 9,100, they're growing that customer base. You can see that the large customers are growing. The C-suite priority customers, 1 million plus ARR has grown from 104 to 118. These guys are doing good things. It's just an expensive stock. And that last earnings did spook investors. Okay, I'm taking my camera away because this is really important to take a look at, okay? So top 25 customer ARR lifetime value. This goes all the way back to 2015. You can see over here, and it goes to the most recent quarter. And you can see IT, right? So initial purchase is that orange, then transactions, and then first multi-year contract is this yellow. So top 25 customers, 233x. Top 50 customers, 90x. Top 100 customers, 62x. And this is showing you how much growth they've had. So there's a lot of room for growth, especially in some of these other sectors where they haven't done as much work. But when you look at this, right, IT, healthcare, consulting, telecom, banking, and you can see how it's scaled over time, right? So the initial purchase is the orange, transactions, boom, 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 multi-year contract, multi-year contract, multi-year contract. These guys, once they get their foot in the door, they do a good job of expanding their products. And that's why that ARR is so high. So ARR is the key metric for measuring business performance. And they want to basically highlight that because you can see total revenue. You can see that the actual revenue isn't, that constant upward push that you want to see as an investor. And you can see that Q3 2022 midpoint guidance is only 208. So this is where they're showing that revenue kind of decelerating in that growth. And this is a lot of the reason why the stock is lower. So these guys are investing for growth. They're driving efficient operations while investing in the business. They've made several acquisitions. I could spend 2 hours just talking about acquisitions and how they're going to build this out. There is a lot going on with this company behind the scenes. They're doing a ton of things with APIs, with analytics, making this an entire end-to-end ecosystem. And they're doing a great job of it. And they've constantly improved and made acquisitions. And like I said earlier, research and development, making new modules, new products, etc. So they're not necessarily going to be profitable right away because they're investing in growth, but you can see that margin has gotten better, right? So they've improved a lot. You can see 2020 was negative 113%, and they're getting to more reasonable levels here. So, this is probably going to fluctuate for a while, but I think over time they're going to be, a free cash flow positive company. And I think there'll be a cash cow at some point, but they're still in that growth stage right now. So next, what I'm going to do, guys, is I'm going to actually break down the stock. I'm going to show you a chart, and I'm just going to give you some real talk opinions of what I think about the company and where the stock might go. Okay, of course, we don't have a lot of technical data, guys. This just started trading back in April with the IPO. And you can see that it basically, let's go all the way back here. It's basically been a downtrend for a while. So this thing popped. I waited. I didn't really buy any shares in the beginning, kind of held off. It went to $89.99. And I was telling the Discord community it was probably going to come back into the mid 50s. Some people think this stock should be like $30 to $35 based on a bunch of different metrics. If you read some articles out there, I'm going to tell you what I think. As someone that used to actually work in this space, that used to sell software as a service, that researches these cloud and SaaS type stocks every single day, and these technologies, enterprise technology companies. I'll give you my take here. So this thing went from $90. It broke down. I thought it was an opportunity 55 or less. That's really where I thought it was going to be a good opportunity. Now it got down to $51.01. It's trading right now at about $53.10, give or take. You can see it kind of bottomed out here, broke that. So if you were to draw a line, I just drew this red line, that's that $51. Maybe it comes and retests that. Maybe it breaks it, okay? So this does have a lockout expiration of 10/18, October 18th. So that's less than a month away. And it's something to be aware of because you could see more selling, okay? So right now, all we know on this is that the low is $51, and you can try to put a valuation on this and use different ratios. You can use, rule of 40, you can use EV, you can use all those different things. If you put it on a chart, it's somewhere in the middle of the pack when you think of some of the high flyer type stocks. It is an expensive stock. Some of you are watching this saying, I hope it goes to $35 and I'll buy it. That could happen, guys. It could happen. I think that it could easily go in the 40s. And I've been telling my Discord group, the Discord community, the Fired Up Wealth Discord community, and check that out on Patreon if you're interested in joining us. But I've been telling the group that I think it could go in the 40s. I didn't really think it would originally, but after seeing, the last earnings report and seeing the sentiment's pretty bad. But I think what might have happened is institutions kind of knee-jerked and went lower. And maybe some of those insiders don't want to sell at that price. Plus, other institutions are going to become more bullish as this becomes washed out. So I'm telling you that it could go lower. If it goes lower on that lockout expiration, I think it's an opportunity. I think anything under $55 long-term is an opportunity. But with any kind of high-flyer growth stock, this thing could easily go lower. It was $90, and if it goes to $35, that's a pretty significant drop, but it could happen. The fear out there, guys, is the competition. Microsoft, I've said from day one, Microsoft is going to be their kryptonite if there is one, because these guys are the leader. If you look at the Magic Quadrants and you look at all the different research out there, these guys are the leader in robotic process automation. Microsoft has made a recent acquisition trying to get heavier in the space. Salesforce CRM is also competing in this space. There's also some smaller vendors that compete in this space. So it's not like UiPath is the only show in town. There are the others that do it, but they do have the most robust solution, and they continue to improve it all the time. I honestly think that longer term, the stock is going to grossly outperform. In the near term, I can't tell you with confidence what it's going to do, if it's going to bottom at $50 or not. The way I like to buy is I like to dollar cost average. I like to back my way into positions. Right now I've got a decent position in UiPath. I'm willing to add more shares if it goes lower, okay? So I've been buying as it goes lower, and I'm saving room to buy if it goes even lower. And that's just how I like to buy. If you can time the bottom, more power to you. If you can time it exactly, maybe it goes down into the 40s, or maybe it even goes in the 30s and you can get it there, that's great. I personally will just add as it goes lower. Longer term, it's gonna work out fine. That's how I like to invest in these type of stocks. If you want my candid opinion, And this video is probably going to be unpopular. There's going to be people that maybe don't like it because they think UiPath should be a $20 stock or, whatever. I understand the company really well. I'm a long-term investor and I'm thinking about 5 and 10 years from now. I'm not necessarily thinking about 5 months from now. So maybe I have some pain. Maybe the stock goes lower, what have you. I have right now, guys, just to give you an idea, I have 500 shares and I'm down about 8% of my shares. Okay. But I'm willing to literally double my position if I needed to. So if this thing went as low as some people are saying it might go to, I would be doubling down and I would, improve my cost basis and I'll be really happy longer term because I'm in the, the mid 50s, the high mid 50s for my cost basis. And I think it's worth that much, but that's just my opinion. If you want my candid opinion, I don't see this stock going to $35, but with that said, it could absolutely happen. Stranger things have happened before. I think it's possible that these guys have a weird situation because of the pandemic too. You think of how businesses were turned upside down because of the pandemic. It could be one of those things where they had some disruptions and they figure it out, but it might take them a year to do that. So I'm bullish on the stock, guys. I think it's an opportunity at this level, but know that it can go lower and that you'd have to dollar cost average in. I generally like to do like 1/5 at a time. So say you wanted to own 50 shares as an example of a stock. You might buy 10 shares 5 different times and then use technical analysis. Now, there's really not much technical analysis here because we don't, if it goes lower than $51, we have no idea really where it's going to go. From a valuation perspective, you could say it's very expensive at $50. You can make a bear case that it's worth $35, but I can also make a bull case that it's worth $70 right now. So, these stocks are very hard to measure. A lot of it has to do with market sentiment as well, but they're really going to have to prove that Microsoft isn't as big a threat as some of the bears are saying. And they're going to have to basically figure out their ARR and revenue growth model where it's more consistent and trending kind of upwards, right? So there's definitely some risk in this stock. I consider it growth. I think if you're investing in it, it should probably be in your spec basket and know that it definitely could go lower. But I appreciate you watching this video, guys. If it was helpful, smash that like button, drop me a comment, subscribe to the channel, click the little bell. Appreciate your time and attention. Hope you have a great rest of your day. Take care.